Happy Monday out there, folks. This is Darius Dale here to present our macro minute for Monday, August 1st, 2022. Welcome to August, my friends. Starting with asset markets, we have stocks mixed this morning, commodities down, crypto down, dollar down, global bond yields up small. Shifting to our market moving headlines, you have easing agriculture supply chains. So Ukraine recorded its first grain shipment since Russia's invasion. That's on its way to Lebanon. Turkey confirmed. So a lot of the weakness we've seen in agriculture prices globally in the last, let's call it 4 to 6 weeks, has obviously been front running some of this easing from the supply chain perspective. So just be aware of that to the extent you're still long inflation assets. Seasonality doesn't matter until it does. Generally, it does not matter, but there are times where to pay attention to it. So August and September are historically the worst months for the S&P 500. Wall Street lore says October is the most dangerous because of the crashes in 1929, 1987, and 2008. But August and September are actually worse, with the index averaging off 60 basis points and 70 basis points, respectively, over the last 25 years. So nothing dramatic, but definitely some meaningful downside deviations relative to the mean of the sample. And then lastly, a big week again from a macro perspective. So on Monday, we get the ISM manufacturing at 10 today. Tuesday, we'll get the that's the July ISM manufacturing. We'll get the June JOLTS data. We also have Chicago Fed Charles Evans and St. Louis Fed President Jim Bullard due to speak at separate events on Tuesday as well. Wednesday at 10, we get the ISM July ISM services. OPEC Plus meeting. You got the Treasury quarterly refunding announcement. I thought Janet Yellen's commentary around not seeing any signs of recession was pretty telling in the sense that it's very likely that the Treasury continues to be actively engaged in the inflation fight through the lens of reduced bill issuance and also through the lens of not draining the Treasury general account balance much below current levels. So we'll continue to get some incremental updates there. If that changes, we'll let you know. Thursday, Bank of England rate decision. Cleveland Fed's Loretta Mester's out due to speak as well. And then Friday, we have the all eyes on the jobs report this Friday, particularly from a payrolls perspective, unemployment rate, and then obviously wages being one of the critical indicators. But as we saw on Friday, it's a little too late as it relates to wages when you go back into that very hot employment cost index print. Big movers, you have Bloomberg Agriculture Index off 2% this morning on that Ukraine news to down 1% month over month. WTI crude oil minus 3% to down 9% month over month. Bitcoin down 3% to up 19% month over month. And then Ethereum down 4% to plus 55% month over month. So pretty interesting. You're seeing weakness across the board in both physical and digital commodities, even though you got the dollar down small this morning. So we're maybe running out of steam as it relates to the carry trade there, the carry trade we saw throughout the month of July. Getting into our volatility adjusted momentum signals and probable ranges. Our US dollar, that is still bullish FAMS. It is oversold, increasingly oversold this morning. So something to pay attention to. We haven't really seen that kind of oversold state in the dollar since going back to late May. Gold, bearish FAMS, that is very overbought this morning here. 10-year nominal Treasury yield bullish FAMS still oversold. It's been basically oversold for at least 30-40% of the time for the last 4 to 5 weeks. This is definitely looks like it wants to change trend, but certainly has not yet. It's been pretty gradual. High yield credit spreads bullish FAMS. That is still deeply oversold. Similar dynamic to the 10-year Treasury yield there. So a lot of the rate fall that we've seen dissipate in recent weeks it's also contributing to a dissipation of realized volatility in both the credit markets and the equity markets. Eventually, we're likely to see a divergence again as the growth really starts to take over. But right now, it's all about the sort of evolving distribution of expected outcomes from the perspective of monetary policy. That's really kind of being priced into asset markets at the current juncture. Again, markets dance; they don't go anywhere in a straight line. You have to give every move an opportunity to get itself priced in. S&P 500, that is neutral VAMs, overbought. VIX bearish VAMs in the middle of its range there. NASDAQ 100, neutral VAMs, overbought. Same deal with the Russell, neutral VAMs, overbought. Bitcoin bearish VAMs, not quite overbought anymore. You got about 5% upside, 15% downside there in Bitcoin. Bearish VAMs, Ethereum, got about 4% upside, 26% downside in Ethereum there. Shanghai Composite, neutral VAMs in the middle of its range. WTI, neutral VAMs in the middle of its range. And then agricultural bearish FAMs, even with today's decline, you're still overbought. And industrial metals, bearish FAMs still for grossly overbought there, similar to gold. So with that, Darius Dale presenting our macro minute for Monday, August 1st, 2022. Best of luck out there today. Cheers.